Morning.
And you wanted to talk about what? You said the word today is what for this time of year?
Taxes. Taxes.
What do we have, about a month?
We got about a month before they
figure that all out.
Before they come in. And now, what you're probably thinking about is the tax preparation, which is what your CPA does to make sure that you pay the least amount of taxes last year for the money you earned last year. And right now, would you say our tax rates are high or low, Mark?
To be honest, I have no clue.
That's fine. Most people don't.
No. We just go with it.
Well, now the audience can't see this, but we're actually in the lowest.
Yeah, hold it up to the microphone.
Yeah, hold it up to the microphone. Can you all see that?
Yeah.
But the lowest tax rate, we're in some of the lowest tax rates we've had in over 100 years. Okay.
But now tax rate, when you're talking tax rates, they differ from city to city, county to county, state to state.
Sure.
So what tax rates are we talking here?
We're talking about federal tax rates, the biggest, scariest ones.
Okay.
All right. You know, being a Texas resident, we have the beautiful benefit of having very low income tax. Now, our property tax is a different story. But whenever it comes to our federal income taxes, do you feel like those are going up?
I have no clue.
Well, we have over $34 trillion in debt right now. So with over $34 trillion in debt, you know, the comptroller for both George Bush and Barack Obama has said that taxes are just, national debt is just deferred taxes. So with over $34 trillion in debt, you can bet your bottom dollar our taxes are going up. In fact, it's already written down into the law, because in 2017 we had a major tax cut that lowered our taxes and raised what's known as our standard deduction. And what that means then is we're paying a lot less taxes, and again, we've paid in nearly over 100 years. But not only that, we also are paying, able to write off quite a bit more from our taxes, which is known as a standard deduction. That being said, all these tax cuts are going in 2026. And once they're gone, in January of 2026, the government's going to start rolling out new tax rates. Now, nobody knows what they are. We know that they're at least going to return to what they were before 2016 or from 2016. But with $34 trillion of debt, we have a lot of our political leaders, the policy setters in Washington, who are calling for us to return to our tax rates that were in 1980. Okay, well, what did tax rates look like in 1980? Well, right now, our top tax bracket, your top 1%, the people who make the very most money in our country, they're paying 37% in taxes. Okay, in 1980, your top tax rate was 70%. Well, now you may go, hey, I'm not the top earner. That's not a big deal for me. I don't have to worry about my taxes doubling. Well, if we were to go back to 1980, right now, if you can make, when you factor in standard deduction, if you're a married couple, you can make up to $122,000 and stay in a 12% tax bracket. Okay?
Yeah.
Now, you make $70,000. If we go back to 1980, which I don't know if we will, but if we go back to 1980, that means we would only need to make $70,000 as a married couple to be at 24%. So you can see your taxes double. Now, even people that are below that, I mean, you could potentially see 21, 18, 16, or 14% in taxes. So no matter who you are, taxes are most likely going to go up. And if we return to a 1980s tax table, you can be looking at your taxes doubling. So With that being said,
But again, this is all from a bunch of folks who can't even agree on whether or not they can keep the government going next week.
that's true.
Yes.
That's true. Now, they may only go up a little bit. The problem is the $34 trillion of debt is looming. And if we don't find a way to eliminate that debt through other means, through things such as tariffs or taxation of other countries and what we're trading with them, or other ways of raising revenue, they are going to come pick our pockets, plain and simple. And so what does that mean, though, for people who are retiring? Many people who are retiring have always been told your taxes are going down. When the 401k came out and they were like, hey, here's a great way for you to not to pay these extremely high taxes now. You can put them in your 401k and you don't have to pay any taxes until you retire. And guess what? Your taxes are going to be lower. Well, for some of those people that were in 1980, now they're retired or about to retire, and they may be returning right back to the same tax rate that they had before. And so what does that mean as far as how do you plan your taxes now? That is something you've got to be very, very careful about. There are all sorts of different things that can impact how much money you're going to be paying in taxes based off the size of your portfolio, the size of your pension. Any extra taxes can raise the amount, any extra income can raise the amount of taxes you have on your Social Security income. Any extra income can affect how much you are even paying on your Medicare. So based off how much you make, there are so many different factors as far as what it can cost you. And so just assuming that your taxes are going to go down after you retire is a dangerous assumption for many people. So with that being said, what we're going to look at is the fact that, oh, by the way, do you know what the highest tax rate ever was in America?
Right off the top of my head, I do not.
Nobody does.
Oh, okay.
They don't really talk about it much. Our highest tax rate in 1945 was 94%.
Gee.
Ronald Reagan, during his heyday as an actor, would only ever work 2 movies a year. He would only ever work 2 movies a year because if he made...
He was pacing himself.
He said that it made no sense for him to make that 3rd movie because he'd basically make a nickel to make that 3rd movie.
Yeah.
And so that's how bad taxes were. Are they going to go back to that again? I don't know. It's most likely they won't go that high, though we have had a few of the more extreme people in our politics calling for a 90% tax. But we are definitely looking towards something down the road that can be very dangerous for folks. Okay? So what do you need to do? If you're nearing retirement, look, period, if you got to be planning for taxes in the future. Tax planning is a much bigger priority than tax preparation. You may have a CPA. Your CPA is perfect for telling you tax laws. We work with your CPA as a team, if you work with us, to try to find the best tax rates possible, okay, for the future. And so, but we give you different strategies that you can be looking for and holding on to whenever it comes to all that, okay? So my phone number is 903-445-1061. You can give me a call if you want to look at your current situation and see how much danger you are in having high taxes. There are strategies to try to avoid paying as much taxes after you're retired. Even if you are retired now, there can be some strategies right now that you can use to help minimize. If you're about to hit required minimum distribution age and you don't want those RMDs hitting you as hard, there's even certain tools, one known as a QLAC, that can help you bypass some of your required minimum distribution if you don't need that extra money and you don't want to throw those taxes. If you are, but it may make sense right now for somebody not to do a QLAC if they're still in the lower tax bracket, to go ahead and start siphoning off more money now while you're able to buy taxes cheap. Because I can pay for taxes 12% right now if I can stay in that bottom tax bracket. So let me give you an example. If my wife and I together, after taxes and after standard tax deduction and everything, if my wife and I are going to make, let's say, $80,000 this year total, okay? And I have $500,000 or $5 million in my 401k, it doesn't matter. What I do know is that if I can make up to $122,000 to stay in the 12% tax bracket, that means I've got an extra $42,000 that I would only have to pay 12% taxes on. So wouldn't it make sense now, when we know the taxes are lower and a tax increase is coming, to convert that money into an after-tax tool like a Roth, which we'll talk about more next time, or there are some other tools for that as well, so that you're paying the taxes cheaper now, and later on your income will be smaller. So there are ways such as that to start capturing some of that after-tax money at a discount before the taxes go up and you have to pay a higher rate. Does that make sense?
Kind of. I did a CD once or twice. that's about the extent of what I ever did.
Okay. Well, no, I get that. Well, the main point though is just to be aware that since taxes are going up, guys, if you have any kind of a sizable portfolio, you want to go and do some tax planning. It will affect your Social Security taxes. It will affect your overall income, because it's going to be a lot easier to live on 88 cents for every dollar than it is going to be to live on 66 cents of every dollar. It's going to be a lot easier to do. And so if you make $100,000, wouldn't you rather have $88,000 clear than $66,000 clear? That's the thing. Are you willing to give up that much money every year because you didn't do good tax planning now? Yeah. So I really encourage you guys, give us a call. We can work you through it. If you have your own financial advisor and CPA, talk to them. If they don't have good strategies for you, still give me a call. I'm more than happy to help you walk through some of these strategies.
Yeah. So while some folks deal with taxes this time of year, you're dealing with them all year long.
Right. So again, I am not a tax preparation. I am not a CPA. That is not my specialty. That's not my licensing. Nonetheless, we do work with your CPA. We do work with your tax professional in order to give you good strategies, because they're trained more to reduce your taxes now. And our goal is to help you create a plan today that will change your taxes in the future.
Very good. And again, folks need to get a hold of you and make an appointment or just pick your brain.
Absolutely. You're always welcome to just call and ask me some questions. I don't charge you for that. 903-445-1061. Again, that's 903-445-1061. If you want to help with the Henderson Student Impact Ministry, which is the mentorship program, we still need some guys to come out. If you got a profession, if you got a skill, if you got something you think the kids would get a kick out of, if you had a great great experience in your career, if you feel like what you've done can inspire a young person, I just need somebody to come talk to my class for about 15 minutes one day this semester, so that we can give them hope that and leadership and an example of what their life can be if they make good choices.
Very good. George McFarland, Seven Waters Advisors, of course, here every Friday morning. Tyler office, but you have offices all over the place now, don't you?
So I have a satellite office right here in KWRD Studios. They've actually been kind enough to let me utilize their facilities here. So I've got an office in Tyler, and I also have an office in Longview.
So if folks all over East Texas need your services, you are available.
I'm within a driving distance for sure.
Very good. George, as always, thank you, sir.
Thank you. God bless.
All right. We continue here this morning at 7:47. It's our Good Morning Texas program, KWRD 1470 98.5.